Good afternoon and welcome to the Asian Midday Market Watch, powered by Rajhi Bank Malaysia from their offices in Kuala Lumpur. Now, Kelvin Wong, market strategist at CMC Markets, is our guest today. Kelvin, thanks for coming in.
It's my pleasure to see you again, Brian.
Now, Kelvin, before we get your insights, I'm going to take a look quickly at crypto markets first, and then let's take a look at regional stock markets. Bitcoin is at 39,362. It's up 2.5%. Ethereum is at 2,888.54. It's up 1.61%. Now, looking across the regional stock markets, we start close to home with the SGX. It's at 3,330.04. It's up 0.28%. Looking across to the KLSC, we've got 1,596.34. It's up 0.65%. Shanghai is at 2,961.73. It's up 0.12%. The ASX All Ordinaries is at 7,627.9. It's up 1.07%. The Nikkei is at 26,773.5. It's up 1.47%. The Hang Seng is at 20,092. It's up 0.74%. And rounding up the numbers, we've got the Kospi, which is at 2,657.73. It's up 0.71%. Now, Kelvin, it's a sea of green across the region. Why is that so?
Yeah, because if you look at it, it's possibly highly related to this stabilization, or I would say in the overnight US stock market. So we start to see a bit of sign of breather or stabilization in the major US stock indices from the Dow Jones, the S&P 500, as well as the Nasdaq 100, because all these indices were badly hit to the downside since the start of this week. But however, if you look at the bigger picture, the market breadth as per se, based on the Nasdaq exchange, stocks listed on the Nasdaq exchange, and as well as the NYSE exchange, the New York Stock Exchange, it has been pretty much lackluster. That means, i.e., there are actually less gainers than losers as a whole. So what I look at it from a technical perspective right now, it seems to me that there is still no clear signs of a bullish reversal in the medium term, and coupled with a very weak intermarket correlation, especially we start to see the strengthening of the dollar against the Japanese yen, and as well as against the Chinese yuan, and plus this ongoing geopolitical tension coming out from Russia and Ukraine. So that could actually see further potential downside on the risk asset, that means i.e. equities from a medium-term perspective.
Okay, now, speaking of yen, the Bank of Japan this morning at around 11 o'clock Singapore time announced the decision to hold its rates steady on its monetary policy settings. Now, that's obviously widely expected. But give us some insights into what that means for the yen and also then moving forward the dollar.
Yep. So before I would actually flash the chart of the to take into detail of the dollar yen technical analysis chart from here, I want to share with you all something pretty remarkable, we call it, or significant in today's BOJ monetary policy decision. So the interest rate living at this ultra low level is pretty much expected. But what unexpected from the market participants over here is BOJ actually pledged to actually do this daily, the money is daily, it's daily fixed rate operation to actually cap this the key 10-year JGB yield to allow to actually fluctuate above 0.25%, above 0.25% and below negative 0.25%. So it's a strong signal, kind of a strong signal to actually indicate that BOJ is actually committed to actually prevent this 10-year JGB yield from breaking past above this 0.25%. So that's a very strong commitment by having pledged to say that they're doing this daily fixed operation on the JGB market. So that being said, over here, so what you could see on the chart, this is the 1 hour chart of this dollar JPY. What you could see is a huge spike up earlier an hour ago, right after that announcement of that fixed rate operation. So this is a kind of a, but you look at it since the 20th of April, so about close to about 2 weeks. So this is the kind of a biggest, sharpest rally, short-term rally seen in the last 2 weeks. And most importantly, over here is what we are seeing right now. Technically, in the short term, we potentially are actually inching up towards the next resistance zone at 130.65 and 132. So these are kind of a risk level as well, because there are some rumblings in the market that the Ministry of Finance may get a bit of uncomfortable once the yen weakened above this 130 level. Then bearing in mind over here is that do not forget Japanese is also considered as a major oil importer to actually run the economy. So with the yen at this weak level, so definitely you actually add up to more imported cost for that.
Mhm.
Yeah. So yeah, going on next over here is that let's take a look at the dollar index. So if you look at the dollar index over here, since the last 2 weeks or so, it has been a very strong rally for the dollar. So primarily it's actually due to the fact over here is that number one, we start to see primarily the yuan weakening against the Japanese with the dollar. Then this kickstarted last 2 weeks, whereas the Chinese yuan actually come into the picture as well. That is causing this spillover effect towards the rest of the major currency, from the euro, from the sterling, and even the Aussie dollar as really starts to weaken against the USD remarkably. So this is a dollar index. So if this chart is pointing upwards, that means dollar is strengthening in general. Yeah. So what we could see over here is that this dollar index right now is coming very close. So right now it's actually quoting at 103.52, 103.50. So now it's coming very close to a key resistance level, which is 103.65. So this level kept previous rallies since Jan 2017. So that's about close to 4 years ago. It's a 4 years kind of major resistance. And bear in mind, the way it start to rest at this level over here is next week we have a key risk event, which is the US Federal Reserve meeting, which is out on the just a quick confirmation. It's a 2-day meeting, so they'll be out on the 4th of May. We know the decision. So market has really been starting to price in a 50 basis point hike, and they will
Yes.
also start to actually do quantitative tightening from this point out. So that has really been priced in. So what markets want now to hear is how aggressive will the Fed be in the next few meetings over here? So that guidance or that particular press conference being held by Powell after the monetary policy decision. So that could be pretty much crucial to be a determining factor whether can the US dollar shape a bullish breakout, a clear bullish breakout above this 103.65. So with that, we should actually be paying very close attention next week on the post FOMC, we call it a press conference, where Powell will actually give its what I call it its guidance, and I believe that reporters will start to actually ask him more clues or where will be the Fed heading next.
Now, Kelvin, on a different note, we're coming into a long weekend in Asia in many markets. Any sort of risk factors we should be watching out for, or perhaps we should be unwinding our positions before the weekend?
So the key thing over here is that definitely we talk about it all boils down to how the US stock market perform, because they are kind of it has a huge impact on Asia itself. And also don't forget over here is that another impact will be the Chinese yuan. So firstly you talk about the China, we talk about the US first. So US later on Thursday after the close, that means Singapore time early morning, so about Thursday about 4 a.m. to 5 a.m. So Apple will start to release its earnings on the day, because Apple is very important. Why? Because it has
Mhm.
a huge weightage in the Nasdaq 100 and the S&P 500. So if we will start to see Apple earnings start to disappoint pretty badly, that could actually tilt the bears to actually call it resurface on the US stock indices, pushing down much lower, and that could actually potentially break the February low. So if that happens or take place over here, I reckon that we might start to see a sea of red on Friday. So because given that the long weekend as well. So but nevertheless, if Apple is able to kind of a big expectation, we may be able to expect a bit of stabilization in the US market to continue going forward. Then on the other hand, to talk about previously I just mentioned about the Chinese yuan, because Chinese yuan has been depreciating significantly against the dollar since last week, where we highlighted in our show as well. So
Mhm.
do keep a close watch on how PBOC are they willing to actually slow down this rate of depreciation, because it seems to me that if you look at it right now, is that early part of this week they actually try to actually reduce or we call it the FX reserve of Chinese commercial banks to actually slow down the pace of this yuan depreciation. But on the hand, the daily central, we call it the fixing, the fix on the onshore CNY rate has been still on the weaker side of the story. So it seems to me that there is not so much clear commitment from the Chinese authority now to actually say that they are totally very uncomfortable with this current pace of yuan depreciation. So if the yuan itself start to depreciate pretty significantly again, let's say for example at the again next week, early next week, where most of the Asian market is closed, we could actually see some softness coming back into the Asia stock market when it start to reopen on next Wednesday.
Now, Kelvin, as always, thank you very much for taking your time to be on the show.
Thank you, Brian.
Now, we've been speaking to Kelvin Wong, market strategist at CMC Markets on Biztech's Asian Midday Market Watch, powered by Rajhi Bank, Malaysia. I'm Brian Fernandez. This video and podcast will be on our website, www.biztech.asia, as well as Rajhi Bank's social media platforms. Thank you for tuning in.